Hey everybody, Crypto Hop coming at you. How's it going today? Hey, remember when the internet first came out? And I remember all these people saying, oh, electronic email will never replace U.S. Postal Service mail. You know what I mean? It's laughable. Can you imagine sitting there, printing out a communication on, let's say, Microsoft Word, printing it and then stick it in the mailbox, and then that's how you communicate like every other couple of days. It's just like the efficiency is mind-boggling how dumb it is. Same thing with cell phones. I remember people saying, I'm not going to be using a cellular telephone. I don't want people to come in and listen in on my conversations and blah, blah. I'm going to use my landline, or landline wasn't even a word then, my regular telephone. Goes on and on. The dot-com era, all these different anomalies that came along and that turned into massive money-making situations. That's what we're talking about today with the cryptocurrency market. Ladies and gentlemen, I have to share today. Just look at historically. In 2017, there was somebody applied for, I forget which firm, an ETF. It was denied. Okay, so because it's fake internet money, it's crypto, electronic money is fake, blah blah blah, internet money. So the narrative went on. From there, we're talking about what was the next in 24. BlackRock submitted an ETF and it got approved in 2024. That was a huge milestone, and that caught institutional money's attention. Now, as we speak today, as of last week, I think it may have been Friday, our government has signed off on clarity, regulation clarity for firms who have clients, right? Investors, their pensions in 401ks and IRAs are now able to purchase Bitcoin. So within those retirement accounts, firms are allowed to allocate a certain percentage to Bitcoin. Listen to this number: $8.7 trillion in the United States is liquid cash in 401ks. Okay, 35 trillion in other assets and stocks and bonds and blah blah. So a total of there's $43 trillion of liquidity in retirement accounts that are now signed off and are able to allocate cryptocurrency, digital assets with that 43 trillion. It's mind-boggling numbers, ladies and gentlemen. You can't even fathom how much money that is. Now, if we talk about market cap, if only 3%, a tiny little 3% of that 43 trillion gets pushed into Bitcoin, that will be enough liquidity push the price up to $1 million per token. It's a mathematical formula. It's not black and white concrete, but it's a more or less number. 3% of that money coming in will push it to $1 million coin. That will happen sooner than later. It's going to inflate the prices, okay, of all the tokens, because remember, what happens is when institutions come in and pump and lock things up into Bitcoin, the retail investors and other smaller firms will take profits and put it into other assets in the cryptocurrency market. For example, altcoins. This is going to be the largest altcoin pump ever seen in the history of mankind because of all the clarity, the government backing, and solely the more numbers of people, retail investors who are more interested in not wanting to miss out. There's going to be a lot of FOMO. There's got a lot of people coming in and purchasing, getting a Coinbase account, cracking account, and they're going to start purchasing things. So, biggest altcoin pump in history. And this is only the US we're talking about right now. When you open this discussion up to the worldwide economic factors, just think of it, some of these smaller countries that have a GDP that's a lot smaller than where they want to be. Like our military has a bigger GDP than I don't want to start naming countries, but this is an opportunity for a country to create Bitcoin reserves and become more powerful and more strategic in this world economy. It's a mind-blowing scenario and opportunity for everyone. Okay. Everybody, all governments, all civilians, all people, all of the above. Now check this out. I just wanted to show you on this. This is the Bitcoin chart here, real quick. If we look at this, this was last night. Okay, right around, and I'll come over here. Okay, this level here, this was about this 117.5 that I've been looking at. This was kind of a resistance level that we were pinging off a couple times back here and up in here. Check out what happened last night. We broke through that resistance, bingo, huge candle, and it quickly thereafter went to test it with a little wick right here. Boom, bounced off again. The retest shot back up. That confirms a new support level at 117.5. And then we're up here trying to establish this new resistance around 118. It's almost 119, and we're hovering right around that. So with this news about institutions being able to invest in Bitcoin, 401ks, and retirement plans, most of everybody that's listening here and who has a job with a paycheck coming in monthly is going to own cryptocurrency. It will be in your 401ks and your IRA accounts. It has to be. Okay, it is the 12th asset class. If these financial institutions don't take advantage of this, they're going to get left behind. So you will own indirectly cryptocurrency, specifically Bitcoin, in your retirement accounts. Okay, it's already done deal. That's what all this hoopla I was talking about the other day. So hey, wait. With that said, everybody, I'll leave you with this. This last little headline says up here at the top: behind the scenes of public companies that are rushing to create crypto treasuries. Okay, all these companies are trying to create these treasuries, and they're converting safe, secure things like bonds, right, and T-bills and cash into cryptocurrency, specifically Bitcoin. And so it goes on and on for this bullish sentiment. Companies stashing crypto. This is a story that hasn't been told well. A lot of people, particularly in the U.S., really haven't seen the growth of BNB chain, on how massive Binance is globally. Okay, this is talking about the BNB, and there's a couple of these that are really getting excited. Okay, um, pushing adoption boundaries. While these types of crypto-related investment endeavors are a great alternative avenue toward long-term adoption, there's still work to be done. Of course, everybody wants to just tread lightly here, but it's all bullish, people. It's all bullish. These things talking about. When we talk to real institutional investors, we still get questions like, what's a validator? Is staking like mining? And these are opportunities I'm going to talk about in a different video. The staking and the yield you can get in this industry. It's creating a leveler playing field with wealth distribution. Banks are the ones who could only in the past use staking mechanisms to gain percentages and yields with other people's money. Now the regular retail investor is going to be able to do yield farming and staking the way that only financial institutions have been able to do in the past. So it's exciting times to be alive. We're ready to do this, people. Just wanted to share that with y'all. Hey, thanks for checking in. Stay tuned. We've got some more details coming. This should be a really fun week next week. A lot of stuff hitting the mainstream media, all right, with cryptocurrency news and stuff like that. So just wanted to share that with you. Enjoy the rest of your Sunday, everybody. Let's stretch it out, do something fun, get a little activity out there. And remember, get some of that. We're talking about the this hydrogen water. There's something about this, people, that really, it's chemistry. The way that the hydrogen bubbles can get through your blood-brain barrier creates a little, that get rid of that fog in the brain. It helps with inflation. Sorry, not inflation, but inflammation within your joints and things. The hydro water is good stuff. Check out the hydro. I'm doing this one day at a time. I'm going to let you guys know how it makes me feel, one way or the other. Is it a fallacy, or is this real stuff right here? So anyway, I'm pretty stoked on it. Talk to you soon. Thanks for checking in. Crypto Hop signing out.